So the same way that in UPI, I go onto the app and I use the app to approve requests that I get for payments. In the account aggregator, what I'll receive is requests, but instead of requests for payment, I'll receive consent requests to share my data.
Hey guys, welcome to Backstage with Millionaires. I'm Caleb, your host, and today the guest that we have on the show is Aaryaman Vir. He's an entrepreneur, a VC, and he's one of the founders of Prophetic Ventures, which is a micro VC firm. He's also volunteering with the iSPIRT Foundation to build an exciting piece of public digital infrastructure for India. So before we talk about that, I'd love it if we could just backtrack a little bit and have you tell me a little bit about your journey as an entrepreneur and also as a VC. How did you get into that in the first place?
Sure. Before I start, I'd like to just say thank you, Caleb, for having me on the show. And also a disclaimer that I'm not a millionaire, so I hope that that's okay with you and your viewers.
Yeah, that's totally fine.
But just to start talking about my entrepreneurial journey, I studied in the US, and after I graduated in 2014, I realized I really wanted to be part of the tech story in India. I thought that there was a lot of potential in India, so I came back to India right after graduation and started working at a startup called Haptik. I was there for about 6 months, and while I was in that extremely fast-paced, exciting environment, I realized that entrepreneurship was something that really appealed to me and something that I wanted to do myself. So I left Haptik, took some time off, learned how to code, did a couple of side projects before I co-founded a startup with some friends called Elemental Labs. So it was one of the earliest companies in India to be in the blockchain space. We were building developer tools to help programmers use blockchains in their applications more easily. So after Elemental Labs, the company's still around, but I realized that my path was slightly different, and that I wanted to start something on my own completely. And for that, I started Prophetic Ventures, which is something which I really enjoy doing, which is investing in companies, working with smart founders, entrepreneurs like the ones you have on your show, and being a part of their growth story. So this is around 2018 that Prophetic Ventures was started, I think, and for the past 2 years, I've been trying to invest in companies and trying to learn the sort of ropes of this industry. And what a micro VC does, in case any of your viewers don't know, is that a full-fledged proper VC it manages people's money with kind of no conditions, right? You give me money and then I deploy it wherever I see fit, according to a contract that we have, of course, but the VC has full discretion and deploys the money kind of wherever they think it should be. Whereas a micro VC, I go look for deals. Once I find a deal that I think makes sense and is exciting, I take that deal around to many different investors. They then have the option to take a call to invest or not. So it's on a deal by deal basis as opposed to kind of just giving like a blank check to a VC to deploy as they see fit. So that's what a micro VC is. And the journey at Prophetic has been very exciting. I've been lucky to invest in some great companies, and I've learned a lot along the way, including the fact that I don't know anything about investing. But I knew that to begin with, so that's not something new that I learned.
Just listening to your story so far, it seems like you've sort of thrown yourself head first into these ventures where you don't necessarily know exactly what you're doing, but you just sort of go into it with an open mind and just start. Like, for example, you didn't know how to code before or did you know a little bit about coding, or you didn't know anything about coding?
Nothing.
Which is amazing, right? Because a lot of people would say, well, I can't be an entrepreneur in the tech space if I don't know how to code, right? But you were kind of like, forget it, like, I'll learn how to code.
Yeah, that's true. I mean, I'm still a terrible engineer and you wouldn't want me anywhere near your code base, but I like to try, and I think I'm very intellectually stimulated by things like technology, engineering, and working with people in these fields really excites me. So I'm glad to always try things out and throw myself into those situations.
Sure, and then the same goes for investing too, right? Not knowing anything going into Prophetic Ventures, but then sort of just being like, well, let's just start, see what happens.
Yeah, I think that's important. I think in most fields it's very common to have imposter syndrome, not know what you're doing. But I think in my view, one needs to push past that feeling and just say that, okay, well, I'll figure it out. Other people have probably figured it out on the fly, so let me also try my best and see what happens.
Sure, yeah. I think that's something that not enough people talk about. At least on this show, we've not really discussed that topic of imposter syndrome, but probably there's a lot more entrepreneurs out there that are feeling that than we might think, So then at what point did iSPIRT, the iSPIRT Foundation, come into the picture?
Sure. So I first met and interacted with the iSPIRT Foundation in 2016. I was lucky enough to meet some of the volunteers when I visited Bangalore, as with Elemental, to basically talk about what we were building in the blockchain world and to learn about what they were building. And I sort of came away from that meeting very impressed by the caliber of volunteers that worked there. And subsequently, I continued my career with Prophetic Ventures, and I was investing in fintech companies. And iSPIRT, I knew both from that meeting as well as from UPI. So I knew that they had a role to play in the conceptualization, design, and deployment of UPI, and that system was a massive success. In less than 4 years, it already constitutes about 25% of all non-cash transactions in the country. So that it's grown really fast, and it's an important part of the digital payments landscape today. So I knew that they had this track record of success, and I knew that they had a big sort of role to play in the evolution of Indian fintech. So as an investor at Prophetic Ventures, when I came across an article talking about a new system they were building, my interest was piqued. Then I decided that I should probably learn as much as I could about that system. So I kind of did like some research and did a deep dive and ended up writing a long blog post about the new piece of infrastructure that iSPIRT was building, which is called the Account Aggregator framework. And I just wrote that blog post for my own learning and knowledge purposes, but turns out that a lot of people liked it, and iSPIRT called me and said, "Hey, we like your work. Do you want to come join us and work on rolling out this new thing we're building?" So that's how I kind of got involved.
And how long have they been working on this prior to you sort of joining the team?
I think it's been for 5 years or so.
Okay.
I think that some of the people involved with iSPIRT have been working on digital public infrastructure for India from 2008 or perhaps even before that, starting with the Aadhaar project and then later UPI and now the account aggregator framework.
So it sounds like this is just one success after another for iSPIRT, right? Where these things are just being adopted and used like crazy. So do you expect the same thing for this?
Yeah, the account aggregator framework, AAs, I hope so, Caleb. I think that it will be successful, and I'm very excited to see what it brings.
Yeah. So tell me a little bit about it. What does it do? What is it for?
Perhaps it would be helpful if I told you a little bit of a story about how this came to be. And you asked about how long they've been working on it. So the truth is that it's part of like a cogent plan to basically transform India's financial services landscape. So iSPIRT is a non-profit think tank that tries to catalyze orbit shifts in the Indian economy by taking a long-term 30-year view on using technology platforms to solve some of the country's biggest societal problems, namely healthcare and financial inclusion. So from a financial inclusion perspective, India was doing very poorly back in 2008. In that year was when the Aadhaar project was launched. At that time, 17% of Indians had a bank account. 10 years later, from 17%, we've come up to almost 1 in 3 Indians.
Wow.
So that's actually quite a jump. And ordinarily, that jump would have taken somewhere around 46 years if you were to follow the trend line of other countries that have made that leap. But in India, it happened much faster. So I think one of the reasons for that was the Aadhaar project. So the Aadhaar project was a piece of digital public infrastructure that allowed people to prove their identity in a very low-cost way, allowing banks and other companies to basically begin onboarding those customers and sort of fulfilling KYC requirements.
Yeah, that was sort of the first time that a lot of people had ID in the first place, right?
That's right. For many people, it was the first ID they ever had. And since I've joined iSPIRT, I've learned that they kind of view this financial inclusion problem from the perspective of one imaginary user called Rajni, who's a vegetable seller. And Rajni is this imaginary vegetable seller who goes to the market and takes a loan in the morning, buys some vegetables, sells those vegetables at a higher price, retires the loan in the evening, and then goes home. So this is the type of profile of user which iSPIRT wants to build for, to make sure that this person, Rajni, can become part of the formal financial system and actually improve her quality of life by getting access to products that can help her stabilize her income or add to her financial health. So how would someone like Rajni actually begin to be part of the financial system? Well, the first thing she needs to do is prove her identity in a low-cost way so that she can get a bank account. So Aadhaar kind of solved that problem. Then she needs a way to transact with her customers. And a point of sale terminal for her would be very difficult, right? Like a vegetable seller with a point of sale terminal, accepting credit card payments where 1 to 2% is cut by the credit card companies. It doesn't really make sense. It's a very high cost of transaction, and it in fact would completely ruin her business. So that's why UPI was created. It was a low-cost way for her to basically be able to accept payments and make payments herself.
Yeah, all she needs is a phone.
Exactly. So now this vegetable seller has a bank account and she's transacting digitally. So the next thing she needs to do is to get a loan. And today what Rajni would be doing is taking a loan from the informal money market at interest rates of 1 to 2%, which on an annualized basis are exorbitant. But from the formal financial system, she can probably get a better rate. But in order to get a loan from a formal financier, she needs a way to share her data and prove to the financier that she's creditworthy. If she does not have a credit score, which is the case for many Indians, or she has a bad credit score, which is also the case for many Indians, then she needs some other form of data to prove to the lender or bank that she's actually creditworthy. So she has all these transactions she's made on UPI. How can she now share her data securely with the lender so that they can see that, okay, this person actually has a good business history and has some decent cash flows, and we can actually lend to her basis these cash flows that she generates. So the way that she shares that data is via the account aggregator framework.
Okay, so that's what she would do in the future with this new piece of public digital infrastructure. But currently, what is the scenario? If she wants to get this loan, she wants to show that she's a good business owner. She has her small business, micro business. What would she actually do today?
So one of the things she would do, Caleb, is actually go to her bank and have them print out a copy of her passbook, which is her transaction statement basically, and then give that physical printout of her passbook to a lender, which is obviously very expensive, painful to do. Or she could actually, if she was digitally savvy, right? I'll describe all the ways that anybody could do it, not just someone, let's say, who's at the edge of the formal system or digital system. Somebody could give a physical copy of their transactions. Somebody could upload a PDF or a JPEG or some image file of their transactions, which then would get converted at the back end, by the lender into the actual transactions. But that's an expensive process. Because imagine I give you a PDF and you need to scan through the PDF to extract the relevant information. That's a time-consuming technical process, which banks don't really want to be doing, and they pay vendors to do that.
And it sounds very informal too, like sending a PDF or a JPEG, like...
Right, it's not a good user experience, right? Like I don't want to have to upload individual bank statements, download 20 of them, upload them, one by one, and then the bank has to scan through them, and each bank statement has a different format depending on which bank is giving it. So then you need to have different templates for different bank statements and PDFs.
It's messy.
It's an expensive, messy process, and it's not great UX for the user. So those are the first two methods: physical, printout and bank statement upload. And then the third would be to give access to a lender to actually go through your SMSs or emails, to reverse engineer your bank account balance and transactions by looking at all the debit notifications that you get on your SMS or email. Oh. And the last way would be what's called net banking scraping, where you actually give your net banking login to a company to use your login to get into your account and actually screen scrape your entire account. So actually going through the HTML and extracting all of the information.
So what's scary about this process for me is that if she's trying to get a loan, say from a money lender, right? And he says that the only way I'm going to give you this loan is if you let me access your bank account, give me your password, your user ID, and let me log in and see your transactions so that I know that you're trustworthy. Like it could be a situation where this is the only money lender in that particular village or that town. And so she's in a situation where she doesn't really have a choice, right? She has to give that information up. Whereas if something like this, digital infrastructure came along and became sort of the norm here in India, then that sort of situation wouldn't happen in the future, right? For a woman like this. Or for a man, anyone, right?
So it's a very suboptimal situation for somebody to share their net banking login with anybody else. You don't want that to be happening because there's so much potential for abuse, right? You can go into someone's account and literally make transactions if you have their login. So that's kind of what we're hoping to get away from. And one of the ideas that underpins this entire account aggregator project is the idea that user consent is paramount. So the way that we look at it, the user's data belongs to the user, not to the bank. So Rajni's data, which lies in the bank's servers, actually belongs to her. The bank is just the custodian.
Wow.
So the bank must give her access to her own data. and allow her to share it with her consent.
Is that the state of things right now? Is that how banks see things today, or is that
No.
something that needs to happen in the future?
No, I think today companies around the world, not just in India, have been operating with this sort of assumption that the data that they hold about users belongs to them, right? Like Facebook, the data that Facebook has about you kind of is in a way owned by Facebook.
Which is unfortunate, because I think, again, we are even put into that same situation where we don't have a choice, right? They give you an option of disagree or agree to the, whatever the terms of using this website.
Exactly.
And then you either don't use the website or you click agree.
Yeah, I think worldwide, the way companies have been operating is sort of in keeping with the idea that the data that they keep kind of belongs to them. But I think we're seeing a shift away from that, both from a top-down and bottom-up level. And what I mean by that is that around the world, consumers are realizing that, hey, my data that lies with companies like Facebook or with banks, etc., is actually mine. And I want to have greater control over it. I want greater privacy. And documentaries like The Great Hack, which talk about Facebook's sort of scandal with Cambridge Analytica, actually contribute a lot to that public sentiment of people wanting better products, better data governance policies in place. And that's the bottom-up approach. And the top-down approach is actually regulators taking the view that, hey, you must give users consent, the ability to share their data with consent or access their data and protect their data. So you see initiatives like GDPR in Europe, which kind of play into that. Like you have to give consent for a company to track you or store your data.
Yeah.
So in India, this entire idea is going to be shaped by a piece of legislation called the Personal Data Protection Bill, which I think is a very forward-looking kind of bill. And what that bill proposes is to give Indians 4 new rights, if you will. I'm paraphrasing, I'm not at all like a lawyer, but the 4 new rights will be the right to data confirmation. So I get to ask a company what data they have about me. They have to tell me what data they have about me. The right to data correction. If I want the company to update my data to something which is currently wrong and I want them to update it and correct it, they have to do that. The third is the right to data deletion, or the right to be forgotten. So I tell you to delete everything about me, you have to do that. And the last is the right to data portability. I have to be able to move my data out of your system somewhere else because it's my data. So I think these are very powerful ideas.
They are.
And although this piece of legislation will be enacted probably sometime later this year in 2020, the Reserve Bank of India has decided to presage this piece of legislation and try to implement the same idea of data portability in the financial services sector before the bill even comes. So that's what the account aggregator framework is. It's a Reserve Bank of India-led initiative to allow users to open up their financial data. And financial data opening is important because in India we have very low penetration of financial products. So credit, insurance, not many people have these products. And it would be much easier for them to get these products if they could share their data in a low-cost, efficient way, so that people could consume that data cheaply, customize financial services relative to each user, and then actually begin giving them bespoke products and services.
Well, you were talking about those 4 rights earlier, and it's amazing to me that those are not already things that we have a right to, right? That there needs to be sort of this bill being passed in order for us to obtain or sort of, get back those rights which were sort of in a way taken from us, right? I don't think that that's the way anyone really thought of it as these things were happening, right? The internet just sort of exploded and people didn't realize what was happening until now. But it also sounds like this is something that, is this being modeled after something that another country is doing, or is this sort of a first time like in the world that these rights are being given to people by a country? By a government.
That piece of legislation, the Personal Data Protection Bill of India, is one of the most, I think, ambitious and expansive pieces of legislation on the topic. As for the account aggregator framework, that does have some similarities with what's called open banking in other countries. In for example, the Europe and the UK.
Okay.
They do have open banking initiatives, but the way which India is doing it with the account aggregator framework, there's many things which are groundbreaking, new, and next level in my opinion.
That's very cool. It's always cool to see, having lived here for 3 years, seeing ways in which India is sort of going above and beyond the rest of the world, right?
I'm very proud and excited to see India actually innovating and kind of pushing the envelope for the rest of the world. So UPI, for example, was a piece of infrastructure that worked so well in India that it's actually being exported to other parts of the world.
Yeah.
Google, in fact, recommended to the US Fed that the US look at a system similar to UPI. And the Bank of International Settlements, which is the central bank of central banks, also highly praised India's approach to infrastructure building in a report they published about financial inclusion. So it's very exciting to see. And I think the account aggregator framework will also be a leading light in the sort of global world of data protection.
So what does the roadmap for these account aggregators look like? Like when can we actually start? Because I don't think anyone really, we all, at this point, most of us use UPI on a daily basis, right? But I haven't heard about these account aggregators up until today, or when we started talking about filming this interview. So when will this kind of go public?
I think that citizens will be able to download an account aggregator and begin linking their data in May of this year.
Okay. And like what form will it take? Because, right, for example, just comparing it to UPI, because everybody knows UPI,
Sure.
right? UPI is this, like you don't download the UPI app, it's just sort of built into all of these other digital payment apps that you use, right? So how is this actually, what is it going to look like?
Good question. So to build on the UPI analogy, the same way that a user will download a UPI app and then use the UPI app to link their bank accounts, a user will download an account aggregator app of their choice. There'll be multiple different account aggregators. These will be licensed entities who have been given a license by RBI. So I'll download an application by one of the account aggregators and link my bank accounts. So it'll ask me, which bank accounts do you have? I'll give them, here are the banks I have, and here's my, PAN number and mobile number. And I'll then ask those banks, is this your customer? And the banks will say, yes, I have somebody with that PAN and mobile number. And with OTP verification, I'll actually link my account. So my bank knows that, okay, this is actually, one of my customers that's using this account aggregator, and my accounts are now linked. So the same way that in UPI, I go onto the app and I use the app to approve requests that I get for payments. In the account aggregator, what I'll receive is requests, but instead of requests for payment, I'll receive consent requests to share my data. So to come back to the different methods of sharing data with lenders, which we discussed a moment ago, using an account aggregator on a lender's website, there'll just be a text field that says, enter your account aggregator ID, the same way that it says enter your UPI ID. And I'll put in my account aggregator ID, and the lender, and we call the users of the financial data FIUs, financial information user. The FIU will send a consent request to the account aggregator of the customer, who's just put their sort of account aggregator ID into the app. That consent request is shown on the mobile app of the customer, and they approve or reject the consent request. The consent request has a fixed format which says, hey, this entity would like to see this data and use it from this period of time until that period of time. And what's cool about the consent, in my opinion, is the fact that it can be very granular. So I can share data that's, for example, like, I can only share my transactions with Swiggy. I don't need to share my entire bank statement with you in order to prove something. Whereas, if I'm giving you access to my SMSs, then you're getting everything there. So I can't pick and choose what I share. So the consent request comes from the financial information user. I approve it. The consent request gets shared with the bank. The bank verifies it that yes, my customer actually has given consent for the data to be shared. So the bank, which is actually keeping the data, will then sort of encode it, encrypt it, and send it along to the account aggregator, who will forward it to the FIU, and sort of data goes securely from one place to another. And the user is able to share their data in machine-readable format from within their bank to whichever party wants to consume their data. And it all happens with specific explicit user consent. And another thing I find very interesting about the consent, in addition to the fact that it can be very granular and you can share very specific data about your finances, is also the fact that all of the data has been standardized. So each type of financial instrument, whether it's a bond, stock, checking account, or deposit account of a bank, has been standardized. So it's the same whether it's Kotak or IndusInd or Axis or SBI. So that problem that we had earlier of having different templates and formats for each different bank doesn't exist here, because the data is standardized and it's machine readable from the get-go. So it's very easy for that lender to then begin using the data to do things like underwriting customers or giving customers, let's say some bespoke financial advice or insights or analysis or anything like that.
Wow. It sounds very complicated, but at the same time, from a user standpoint, it sounds like it's going to be very simple to use.
It will be very simple. It'll be a huge UX improvement over the previous forms of data sharing. And just to kind of give an example of what a use case would be like in case people are trying to wrap their heads around it. Imagine I have 5 bank accounts or 4 bank accounts. Every time I want to check the balance of my bank accounts, I have to go onto each bank's individual page, and then I can check the balance that I have with that bank on that page. Then I have to log out, log into the next bank page, check my balance there. That's kind of a pain. So tomorrow what I can do is I can give consent for all my data to be pulled from all my bank accounts and aggregated in one place, where I can see all of my data in one place in real time across all my different bank accounts, across my stockbroker accounts, across all my various financial instruments. I can aggregate it into one place. So it's basically possible for users to share data, with anyone securely, provided they get something in return. So it's up to entrepreneurs, I feel, to find ways to add value to customers.
Yeah, it does sound pretty amazing, both for the sort of the end user, the person who is, trying to give this information over to the FIUs. But I'm also curious to know, like, for the FIPs, the banks, I guess if this bill does go through, then they'll be sort of forced to sort of give their customers' information away if there's a request made through this infrastructure, right? But at this current point in time, why would they even want to give that information away? It seems like they wouldn't want to. It's sort of, as far as they see it, it's their information to hold on to and benefit from, right?
Yeah, that's an extremely good question. And it's up to the banks to decide if they want to be part of this account aggregator framework or not. It's opt-in, it's not mandatory. As you said, like once the data protection bill comes, then it may become mandatory for the banks, but for the time being, it's not. And they're opting to be part of this, and they're opting to allow their customers to share their data. And you're asking, a very good question. So the reason why they're doing that is because the system has been architected in such a way that any entity, like a bank, for example, can only be a user or consumer of the financial data if they also become a FIP or provider. So you can only, to use terminology from the torrents world,
I was just thinking that, peer-to-peer, yeah.
Exactly. You can only be a leecher if you're also a seeder.
Gotcha.
You need to reciprocate and give value to the network before you consume any value. So the way the banks see it is like, okay, my customers may have greater ability to, go to other banks and share their data and switch over to another bank, which is not good for the bank, even though it might be very good for the user. But the way the banks see it, if I allow that to happen, I will also be able to potentially serve customers of, my competitors. And anytime I want to give out loans or give out financial products, it becomes cheaper and easier for me to understand the financial situation of my customer. And because I'm a big bank, I have so much reach that I can probably serve those customers well, and we can all grow the total size of the pie. So rather than trying to keep a large piece of a small pie, maybe let's make the pie much bigger, right? By allowing Indians to get access to more financial products and grow the entire market.
Gotcha.
And then own like a piece of that larger expanded market.
Sure. And
similarly to UPI, right? I think today many banks think there's no choice but to be on UPI because customers love it so much, it's added so much value to them that if any bank stopped being part of UPI, customers might switch over. So similarly, banks might feel that, okay, if I don't give this, but my competitors give this new facility to customers, then my bank will lose out. And lastly, the banks want that data, right? They want to be able to consume that data in order to serve customers better. Today, if a bank gives you a loan, Caleb, they'll probably ask you to open like if HDFC gives you a loan, they'll probably ask you to open an HDFC account and then put the money into that account. So they can monitor the money, right, in the loan. What are you doing with the money? How are you transacting? Are you likely to run away and like not pay back their loan? They want to know what you're doing with the money. That's why you have to open an account with them. But tomorrow, they can give a loan into an ICICI account and just get you to, plug your data into them so they can see what you're doing, even though it's an ICICI account.
Right.
So they sort of see this as like a way to expand their own product offering. And lastly, if they want to consume the data coming into the network, they have to give it. And they definitely want to consume the data coming into the network because in addition to banks, there are also tax platforms like the Goods and Services Tax Network, CBDT. In the future, there'll be, other providers of financial data as well. So like asset managers, insurers, different things. So the banks definitely want this information from these sources like GSTN in order to, let's say, make business loans happen by understanding a business's invoices.
Okay, so this is going to be, you had said mid of this year is when this is going to go live, right?
Yes.
Okay. And where can people find out more about this if they want to know more? I think on the iSPIRT Foundation website is one place, right?
That's one place. If people want to find out, there are some good blog posts and articles about the topic.
Sure. And we'll be linking to those in the description of this video, by the way.
There are also some, if people want to see, the RBI has given some regulatory definitions to this ecosystem, and as well as some technical ones. So similar to UPI, this system is also kind of open. So that means that the API specifications and the technical specifications are open and public, and anybody can go begin building on top of it, viewing it, critiquing it. So it's, I can tell you where to find that, and people can go look at it if they want.
Sure.
And there's also an organization called Sehmati, which is a collective of account aggregators, which is sort of driving the evangelization and formation of this ecosystem. So that website also contains a number of blog posts and articles.
Perfect. So yeah, we'll be putting the links to all of those in the description of this video, as well as some relevant social media links. For example, Aaryaman's LinkedIn, so you can go check that out if you want to know more about him. Also, if you enjoyed this video, I'd love it if you could share it with somebody who you think would also enjoy it. It's a really interesting topic in my opinion, and will soon be very relevant. People will be talking about this probably in the same way that they were talking about UPI when did UPI go live, by the way?
2016.
2016, exactly. Yeah. And I'm sure there was lots of buzz around that at that point, even though there is still buzz today. Also, if you have any questions about some of the topics that we talked about today, feel free to leave a comment down below and we will get back to you on that. And also, thank you so much for watching this episode of Backstage with Millionaires. And thank you so much for coming on the show, Aaryaman.
Thank you for having me, Gil.
Yeah, for sure. That was, wow. It's something that's like, feels like we're right on the cusp. Like it's, it's very exciting. I'm sure you feel even more excited than anybody that you're involved in it, right?
I feel very excited and privileged,
Yeah.